Hello friends, welcome back to my channel. Today I will be talking about credit cards, whether credit cards can prove to be a debt trap for you if you use your credit cards for making various utility payments. So do watch the video till the end, as this video will definitely be useful to you. So friends, in the present times of this COVID-19 pandemic, we all are using credit cards for making most of our payments, be it rental payments or paying of electricity expenses, paying of telephone expenses, shopping groceries and making other payments. So credit cards, they offer you a variety of benefits. We all know that because we are more attracted to the benefits while we take or avail the credit cards. So they give you various offers, coupons, etc. But one thing which we don't understand, later we find ourselves in a problem, is that they can also lead you to a debt trap. You will not be able to come out of the debt if you do not understand the working of the credit cards. So in this video, I will try to explain how interest is levied, how you can avail the benefits of your credit card but not fall into the debt trap. So I will be taking the help of a few examples. First one, if we take that the transaction amount, the amount you have expended through the credit card is rupees 10,000. The date of the transaction was August 1st, 2019. Your credit card statement was issued on August 15, 2019. Now you can see whenever you look at a credit card statement, there is a minimum amount due. Now that minimum amount due is the minimum amount which you are required to pay in order to avoid any kinds of late payment fees. So minimum amount due is normally 5% of the retail purchases plus other fee or charges. So minimum amount due here comes to rupees 500 rupees. I am taking for simplicity of calculation 5% of 10,000, which is 500 rupees. Now this 500 rupees is the minimum amount which you are required to pay. However, the total amount which is due on your credit card is 10,000 rupees and the due date for the payment is August 26. Now we are assuming a monthly interest rate of 3.5% on unpaid credit card bills. So normally credit cards charge you from 3 to 4% on a per month basis on your unpaid credit card bills. So we take the first scenario where you pay the full amount before the due date. So you are paying the full amount on August 21st itself. That is entire amount of 10,000. You are not paying the minimum amount due. You are paying the entire amount, transaction amount which you have done on your credit card before the due date. Then no interest shall be charged because the payment was made before due date. You are paying the entire amount. No interest shall be levied. This is the ideal situation. Now what here you have done is you have transacted on August 1st, but you made payment on August 21st. So till August 26th you have a free credit period. From August 1st, from date of transaction, till August 26th, which is the due date for the payment, you have a free credit period. Now this period, it can be range from around 30 days to 45 days depending upon your credit due dates and the date of transaction. So here what happens is that you are getting you transacted on August 1st and you made the payment before the due date, so no interest was charged because entire amount was paid. You are not paying only the minimum amount, you are paying the entire amount. Now we move on to the second scenario, which is very important now. You are paying a partial amount before the due date, that is on August 21st. You paid only 5,000 rupees. You have not paid entire 10,000, but you paid 5,000 rupees only. The next statement date, that is the next statement for the next month, would be on September 6th. Now we are assuming that you're not making any further transactions. So interest charge first will be levied for 21 days, which is August 1st to August 21st when you are paying the 5,000 rupees. It will be on 10,000 rupees from August 1 to August 21st, it will be 10,000 into 3.5% is an per month basis. So 3.5% I take into yearly into 12, we do it into 12, and you multiply by 21 days by 365, being the total number of days in a year. So the interest comes to 241 rupees 0.56. Next, you will levy interest will be levied on from August 22nd to September 6th, which is the date of the next statement, which will be on 5,000 rupees, which will come to 86.4. So this will be the total interest which will be charged. So interest shall be charged on the complete payment, that is of 10,000 rupees, complete transaction amount till you make the first payment, and balance amount of 5,000 interest will be levied for the next 15 days till new statement is generated. On the new statement, then your due amount will be there, which is 5,000 plus the interest for these 2 days, 21 and 15 days. Now we take a next scenario. Yeah, partial amount is paid after due date. The due date was August 26, 2019. You paid partial amount of 5,000 rupees on August 28. Now here you have made a big mistake. You are paying it after the due date. So interest first will be levied for 28 days from August 1st to August 28 on 10,000 rupees, which comes to 322.2. Interest then will be levied from August 29 to September 6 till the new statement is generated, which will be 52.8. So this will be total interest 322.2 plus 52.8. Plus you will also have to pay late payment charges and other charges as per the credit card norms. So this will come to a huge amount. I am taking only 10,000 rupees. Now generally credit card limits from a normal customer is minimum I can take around 40,000 to 50,000 rupees. So I am taking this 10,000. If you multiply it by 5 times, then you can imagine what can be the amount of just the interest rates. Next scenario is that partial amount is paid after due date, but what you do is you make another transaction after the first statement, that is on August 15 you make another transaction of 1,000 rupees. Then you see the interest. First will be interest levied for first 15 days, which is August 1st to August 15. August 15 being the new transaction will be 10,000. Then interest from August 16 to August 28. August 16 to August 28 being the date of the partial payment. 11,000 interest will be charged on 11,000 rupees. Next would be from the next 9 days from August 29 to the date of the next statement, which is September 6, on 6,000 rupees because you are paying 5,000. So 11,000 minus 5,000, which is 6,000 rupees. This will be the total interest. Plus if you are paying after due date, there will be a penalty, late payment penalty also. So interest will be charged on complete pay of 10,000 rupees till first payment. Then interest will be charged on total outstanding, being the whole outstanding plus value of new transaction till date of first payment, and balance amount till new statement is generated. Additionally, late fee will be levied. Now if you look at this, the problem that comes is that this 1,000, no interest should have been levied on this 1,000, because statement has, in respect to this 1,000, has not yet been generated. So normally we see this 10,000 rupees till August 26 you should not have any interest being levied, but as you are not paid, then interest was levied. Similarly for this amount also, this 1,000 amount also, interest should not have been levied, but since you have not made the full payment before the due date, or even after you have not made the full payment before this due date, then you will not receive any further interest-free credit period on new transactions also. So until and unless you are making the full payment of all transactions which you are incurring on your credit card by the due dates, you will not receive any further interest-free credit periods which you generally receive. So interest will be charged just from the day you enter into any new transaction, interest will be charged from that day itself. So you can see how this debt is increasing and you are slowly moving into a debt trap. So now that comes the points which are to remember. These are very important points. Now if you pay back the entire outstanding amount, which you have expended in your credit cards, through your credit cards, then no interest will be levied. This is the ideal situation. Use credit cards, get points, redeem points, avail offers, but pay the entire outstanding amount by due date. Don't let yourself fall into a debt trap. It will be very difficult for you to come out of the debt trap and you will spend a lot of money. Next, if you do not pay back the entire amount by due date and pay partial amount, interest shall be levied on the unpaid amount. Avoid making fresh transactions if you have not paid the entire credit due, as the interest-free credit period is withdrawn. So if you have not paid the full amount, don't use that credit card. If you're not, suppose you have entered into a huge transaction, say of rupees 2 lakhs, your limit is 2,50,000, you have entered into a transaction of 2 lakhs, you could have paid only 1 lakh rupees in that month, and you seek to pay in 1 month plus whatever interest it comes in the next month. But don't enter into any fresh transaction. If you again enter into a fresh transaction of 1 lakh, then from the date of the transaction, interest will also be levied on that fresh transaction. So don't use that credit card. If you have outstanding in any credit card, don't use that credit card until and unless you have paid the entire amount by the due date. So avoid making any fresh transactions if you have not paid the entire credit due, as interest-free period is withdrawn, and even fresh transactions, they start attracting interest charges till the entire due amount is paid. If payment is not made by due date, interest will be calculated on a daily basis. And there is another thing, GST at the rate of 18% is additionally charged on interest amount. So all the interest that I was talking about in the previous slides, GST at rate of 18% will be charged on that interest. You have to remember that. Next is that using your credit cards to withdraw cash. Now this is, I tell all my clients, never use your credit cards to withdraw cash from ATM. So avoid using credit cards for ATM withdrawals. So, and because an additional fee of around 3.5% is charged on amounts which are withdrawn. Also, in cases you use your credit cards for ATM withdrawals, there is no credit free period. Interest is charged right from the day of the transaction. So there is no credit free period for the repayment on cases of withdrawal of cash from ATMs. So do not use your credit cards to withdraw cash. And non-payment of the minimum amount due on time would additionally cost you late payment fee up to rupees 1,000, or it can be a percentage of total amount due. Now it depends on your credit card. In many of the private credit cards, this fee can be very high. So beware. If you are not able to pay the entire amount, at least pay the minimum amount due, but try to pay the entire amount within the next 15 or 30 maximum days. Don't let it stretch over a large period. And if you are not able to pay the outstanding amount, don't use that credit card further, because you will go into a debt trap. You will not be able to come out of that debt trap, and you will have to spend a lot of money on that card, and that will be a very loss-making exercise for you. So try to make payment of the minimum amount, because or else late fee will be charged, which can be a high amount. So now I will try to tell you how you will be able to avoid such a trap. What to do if you're unable to make payments before due date. Now there may be in certain cases where you're not able to make the full payment before the due date. What you can do is, you don't further use that credit card. You can do what you can do is, you can convert. Now many of the credit cards they provide, I should rather say most of the credit cards they provide an option to convert your big transactions into EMIs, that is equated monthly installments, for ease of repayment. Convert them. Certain amount of interest will be charged, but that will be beneficial for you. Convert your big purchases into EMIs. Credit cards, they provide you option to convert them into EMIs. Convert them into EMIs. That would be beneficial if you're unable to make the entire amount of payment. Now, even if you're not able to pay the entire amount at one go or not be able to convert into EMI, what you can do is you can of course take any personal loans. The interest rate is very much lower than what these are being charged by the credit card companies. So take personal loans from any bank or private institutions and then make payment of the credit card, because credit cards, they charge you a lot more interest. So follow these steps, make a wise use of your credit cards, and you will be able to save your income from going into the credit card debt traps. If you find this video useful, do like the video and share it among your friends, and help your friends by telling them how not to fall into the debt trap of the credit cards. I would not say that you stop using your credit cards. Credit cards, they provide you very good opportunities, they provide you many offers, give you good coupons. They serve as very important purpose that when you do not have any liquid cash or money in your hand, they give you a free credit period. But you have to keep in mind the points that I had told you in this video. So thank you for watching my channel. Do subscribe to my channel and click on the bell icon to receive regular notifications. See you with another video. Till then, bye bye.